Joining us live now for our weekly market chat is Evan Lucas. Evan, can you tell us what are the markets looking like this week?
Yeah, good morning, Annalise. It's probably going to be a bit of a quiet week. This week globally is actually one of the real quiet periods of the entire year, and the reason for it is that the two major central banks across the globe, the Federal Reserve and the ECB, are actually in a blackout period. ECB meets at the end of the week, and then the Fed meets at the end of next week, and both of them are gearing up to possibly move monetary policy. So that means markets tend to actually sit on the sidelines and wait. They don't really want to be long or short in either direction because of the uncertainty that comes around that. Particularly, we're leading into these meetings. The ECB could actually see all of their actual sort of cash rates, what we refer to as cash rates in this country, could actually go into negative territory. And you're also then expected next week to see possibly 25 or 50 basis points cuts from the Fed. So markets last week told you that. The US markets had their worst week since May. Europe did as well, and we'll probably follow suit. So it's a fairly quiet week for that reason, likely to see us ease.
Evan, auction clearance rates remain above 70%. What's your take on that? Is there more to this than meets the eye?
Yeah, there is, Kieran, and I think that's the way to actually ask the question and answer it, is that yes, since the election, auction clearance rates are up. Yes, since the RBA cut rates, you've seen more interest in lending, you've seen more interest in housing. But the reason they're so high is that the amount of supply on market is very, very low compared to this time last year, and particularly compared to the boom years of 2013 through 17. So only around about 158 homes were sold in Melbourne. You look in Sydney, it's just over 250, significantly below. So that hyperinflates that figure. So there's a lot of people pointing out that, yes, auction clearance rates are good. This is really good for the housing market, blah, blah, blah. But it's not necessarily down to the reasons you'd expect. If supply remains this weak on market, it does therefore show that even though there has been a slight recovery in price in housing, it's down to simple economics of supply and demand rather than anything else. And until you actually see supply coming back to levels that are more in the norm, which would probably be around about sort of 500 supply in Sydney per week, then until then, you can't really argue that the housing market is actually returning to levels that we saw, as I said, through that boom period of 2013 to 17.
And if we're just looking ahead, those inflation figures are due next week. Is there any chance we could be edging towards deflation?
There's possibilities, and I actually suspect you've already alluded to the fact that sitting Parliament is back this week. Don't be surprised if you start to hear talk around this, in the fact that you are possibly about to see that quarter-on-quarter inflation, so not deflation, inflation actually remains basically at zero on a core basis. Expectation on a headline is 0.3 of 1%. It won't be deflation. Deflation is actually seeing prices going backwards. What may be happening is what we call disinflation, which is where you still have inflation, but the inflation price is actually getting lower and lower, and that is more likely. We know that housing has been in a really big rut, as I just alluded to. Pricing in household consumption has been in a rut, and then you've got the only thing that's really putting pressure on the upside is probably energy and that kind of consumption. But the RBA strips that out. It's not part of core. So overall, it's probably likely that disinflation is certainly here.
Evan, we appreciate that. We'll catch you later in the week. Thanks.
Thanks, guys.